Hello, welcome to this video. My name is Milind Date and I am the expert tutor for the financial management paper. In this video, I would be covering some of the important aspects about analysis of a debt factor, which is part and parcel of accounts receivable management. Remember, this is not a teaching video, but I'll try and cover some of the ways which I recommend to you to use while you are learning and practicing exam questions to be able to face the examination with confidence. So before we start our discussions, let us see how this particular area is covered in the syllabus. Date factoring is part of section C of the FM syllabus, which is dedicated to working capital management. In particular, this date factoring is covered under management of receivables, subsection 2 of section C of the syllabus. And carefully observe the learning objective, what the examiner says. Discuss, apply, and evaluate use of relevant technique in managing accounts receivable using factoring and discounting. So there are two techniques covered under this syllabus area. One is factoring and the other is discounting. In this video, I won't be concentrating on discounting, but we'll discuss factoring related issues. The scope is very well laid down in the learning objectives. Discussion would involve considering and arguing in favor or against of using a financial tool like factoring. Apply would mean relating your discussion to the given scenario. And evaluation is nothing but use of the information given as an evidence in support of your arguments. So although the learning objective uses verbs like discuss, apply, and evaluate, it doesn't directly signal that the questions on this topic would be based only in section C of the examination, that is a constructive response type questions. Because the examiner has clearly mentioned that in section A and B, where objective type questions are asked, the questions can come from any syllabus area. So even factoring as a syllabus area qualifies to be tested even with the help of objective type questions. So that's what I said. Section A and B, OTQs, and section C, the constructive response type questions. So what's factoring actually? It's one of the tools available in receivable management. Companies outsource their credit control function to a specialist agency named as factor. Companies do sell their products on credit to its customers that want to try and recover this money as earlier as possible. Sometimes even much before the due date, they need money. So how there are two ways. Either they can make their customers pay early by offering them some early settlement discount, or they give this responsibility to an outside agency for a fee. So instead of directly giving the discounts to the customers, they offer a fee to this factoring agency. So before you, of course, know the way in which factoring services can be used by the company, or should the company go ahead with the proposal submitted by the factoring agency? You need to understand some important terms that relate to factoring services. Because unless you do that, it will be difficult for you to evaluate the factoring as a tool. Either the factoring proposals received from more than one factoring agency, or comparing factoring compared to discounting. So the areas or the terms which you should know, refer to different services that are offered by factoring agency, different costs that are involved in using them, and after careful consideration of both the services evaluated, costs evaluated, whether it is worthwhile to go ahead with the proposal. So services that are offered by the factor would include the services of credit management. Entire credit management function is sort of handled by this factor, which includes invoice accounting, sales ledger maintenance, debt collection, delinquencies, etc. There is another service that factor provides, and that's financing. When the receivables are sold by the company to the factor, out of the total due amount, some money is provided as an advance, maybe 75%, 85%, whatever agreed between the two parties, is advanced to the selling organization. Of course, when you receive an advance, the company will have to pay interest on that. And this interest generally is a bit higher than the bank overdraft interest. So to that extent, this service becomes a bit costly. Third and very important service that is offered by factor is the credit insurance. Risk of bad debts, the company gets protected against. And the risk of bad debts is then assumed by the factoring company. So as students, you should understand clearly these three types of services provided: credit management, financing, and credit insurance, for which, of course, they will charge fees. And the fees could include service fee for managing the credit administration and collection work, interest, as I said, on providing advances, and a certain extra fee which can be charged as a premium for assuming the credit insurance, the credit risk, the bad debt risk. Generally speaking, who should be using this factoring service? And this is what you should be careful about, because this information may be available to you in first one or two sentences of the scenario given to you. The nature of the organization. Companies who are small organizations, who initially cannot afford setting up a full-scale credit administration team, can make use of factoring services. Or the companies that grow very fast and may not be able to step up that growth rate by setting up support systems, they would be the ones who would make use of this. So try and support your final conclusion by pointing this out, that this particular company in question is a small organization, so it may not be able to afford the credit management systems. So for them, factoring could be better. Now, this is a qualitative argument that you would be making, but support it with your financial calculations. Based on whether the user company obtains credit insurance or not, factoring service can be of two types. And this again could be added by the examiner in the task requirements. And these services could be called as with recourse and without recourse, where the recourse word indicates whether the factor has the empowerment to come back to the selling company to recover money in case the customers don't pay. In a with recourse arrangement, if the customer fails to pay, the factor can compel the selling company to make the payment of a defaulter. In case of without recourse, the factor cannot go back to the selling company even if the customers don't pay. They have to assume the risk of bad debts. So that's how these specific terminologies used for factoring arrangement with recourse, without recourse. So factoring with recourse, if it is done, factor does not assume the risk of bad debts, whereas factoring without recourse means factor takes over the responsibility of bad debts. And naturally, in a without recourse kind of a arrangement, there will be an extra fee payable. So in the examination, the examiner can either just ask you to find out the value of the factoring proposal with recourse and without recourse, or will specifically give you with agreed arrangement, whether it's a with recourse arrangement or without recourse arrangement, and will ask you to evaluate the proposal. So please read the given scenario very, very carefully, with recourse or without recourse, and then what are the fees payable for that kind of service. When you're evaluating a proposal, you should be able to talk very clearly about the benefits that the proposal is going to give it to the company. As we have seen that the factor takes over the credit administration function, so naturally there will be a saving in fixed administration costs related to credit department. Company need not have to set up the credit control, credit collection, and credit management function. There could be a possible reduction in receivables and as well as bad debts, because factors expertise may help you to collect your dues in time, and therefore your overall receivable level can drop. If the companies try and collect on their own, generally they face a problem of delayed payments. And factories can generally charge a lower fee, obviously because they enjoy the economies of scale due to their large scale of operations. So these are the benefits which you can list in support of your financial calculations to come to a conclusion whether factoring is going to be useful for an organization or not. But factoring agreement cannot be sans challenges. There will be some challenges faced by the selling organization. If you tell somebody else to collect money on behalf of you, your relations with customers is likely to be damaged to a certain extent. It will be difficult for you to justify if somebody else start pestering customers for payments, whereas you won't do that. So it's a challenge about damaged relationship. It may not get damaged immediately, but yeah, I mean, over a period of time. Company loses complete control on its sales ledger. They will become totally dependent on the records that are maintained by the factor. So loss of control is another challenge they face. And finance costs on the advances that the factoring agency pays to the selling company, they're generally higher. So that's another challenge. You'll have to see the trade-off between the overdraft that is charged by the bank and the fee charged by or interest charged by a factor on advances. Obviously, it's not that this point is only the decider whether to go ahead or not. You have to see holistic picture of all the benefits that the company is likely to obtain, all the incremental costs that the company is likely to incur, and then take a combined view before you recommend or of using the factoring services or going against against the proposal. So this topic typically can be tested in both OTQ questions for application of the knowledge about factoring, and also there could be a question in section C of the examination. So let's quickly look at some of the ways in which the examples questions can be asked so far as OTQs. Now this is a knowledge testing kind of a question. Which of the following represents services offered by factoring agency? Now, if a student has not learned properly, it will be difficult to answer such question, and there will be unnecessarily loss of 2 marks. Of course, the alternative A is completely out because it deals with inventory, whereas debt factoring is related to receivables. Cash requirement levels, fixation of cash requirement level, it deals with cash management and not receivables management. Managing a client's sales function and managing client's credit management. There could be 2 confusing sentences. Please remember, date factor is not going to manage your selling activity. It's only after goods are sold, after the receivables emerge because of the credit term, they can take over the credit management, but not sales responsibility. They are not sellers. And therefore, alternative C is also incorrect. Here the correct answer is answer D, alternative D. So I have specifically illustrated this to make you aware of how good learning of this concept will help you to understand and answer questions correctly. Let us look at another question. OTQ type again. Duracell uses factoring services offered by EasyFin. Terms of contracts are without recourse. So it's directly told that they are without recourse means EasyFin is responsible for risk of bad debts. They have no recourse back to Duracell. Which of the following statements is correct with regard to without recourse arrangement? And then there are A, B, C, D. Risk of bad debt will be faced by Duracell. Obviously, the statement is incorrect because it's a without recourse arrangement. So Duracell is no longer responsible for bad debts. Risk of bad debts will be faced by EasyFin. Yeah, this seems to be the correct statement because the arrangement is without course. But before we select B as the correct alternative, let us rule out why C and D are not correct. Sales ledger will be maintained by EasyFin. Yes, sales ledger maintenance is a service provided by EasyFin. But then answer C is not correct. Why? Because it has nothing to do with the without recourse arrangement. It has to do with factoring arrangement. But the question is asked. Question is asked us correctness about without recourse arrangement. So C is not specific to without recourse, and therefore C is also not correct. Collection of customer invoice is done by EasyFin. That's also true. But that's again not related specifically to without recourse arrangement. Whether the arrangement is with recourse or without recourse, money will be collected by EasyFin because that's the factoring service that they provide. And therefore, the correct answer is answer alternative B, option B. Please note again, if we do not learn this concept properly, it will be difficult for us to face such simple or innocuous looking questions, because we don't, number one, have learned properly. Number two, we do not read the requirement carefully. Now here, what was important is, the wording with regard to without recourse arrangement. So although seemingly these two are correct, they are wronged because they are not related specifically to the without recourse arrangement. But this is how this topic has to be learned very, very carefully. Let's now look at a CR type style of questioning on this topic, of course. The question may test you on evaluation of a factoring proposal or comparing the outcome using factoring with that of early settlement discounts. So one para may be related to the company directly giving early settlement discount to customers. Another para may give information about a proposal received from factoring. You will have to do the calculations, look at the qualitative aspects of both proposals, and conclude which of the two in the given scenario will be more beneficial for the company. And there could be a generic discussion type question on the merits and demerits of using factoring as services. Carefully observe what type of data is given to you. It would include the revenue or volume of sales, existing level of receivables may be given, existing level of bad debts may be given, and existing cost of bank overdraft may be given. This will help you to assess how at the moment the cost of managing recoveries is managed by the company. There may be a data additionally given to you about factoring arrangement, fees which are charged either with recourse or without recourse. Factoring arrangement may result into benefits like reduction in receivables, reduction in bad debts, reduction in administration costs, and the arrangement of providing advance by the factor and charging interest based on that. So let's look at how a CR type question can actually be built by the examiner. This will be a part of section C of the examination. So current data is given. Current annual sales of Boulder, 21,300K, that is 21 million. Current level of receivables given, which is worth 60 days receivables. Factor has afford to manage the receivables, which will result in the reduction to 35 days. From 60 days, receivables now come to 35 days because of course of the expertise. Bad debts from the current level of 0.9% of the sales to 0.6%. So there will be benefit in terms of bad debts. Expected saving in administration costs, that's also given to you, $40,000 per year. Now, these were benefits. Reduction in receivables will lead to reduction in the interest cost, which would be paid to bank otherwise. Reduction in bad debts will reduce the cost to the company, and administration cost also will result in savings. So these three were savings. Further information, factor would advance 80% of the revised receivable value and charge interest 2% higher than that of bank overdraft, which is 7%. So what you need to find out is the interest as a cost. But while calculating, you have to be very careful. 80% of revised receivable value. So revised receivable days are known to you, which is 35. You will have to calculate the monetary value of 35 days and then calculate 80% of that, on which you have to pay 2% higher over 7. That means at the rate of 9%. So this will be your additional interest cost. Factor fee for providing the service will be 0.75% on with recourse basis, 1.25% without recourse basis. And then you are simply asked to calculate the value of the factor. It could be a positive, it could be negative, with recourse arrangement and without recourse arrangement. And you are asked to assume 365 days a year, which will be typically the condition given to you. So the first thing that you need to do is to calculate revised receivable levels equivalent of 35 days. Then calculate reduction in the amount of receivables and therefore reduction in the amount of overdraft, because you will require lower overdraft now because of reduced receivables. That will be calculated at 7%. Then you should consider the reduction in admin cost, saving in the bad debts, and therefore 3 put together would be your total savings. Factor with recourse basis fee and interest on the advances, that will be 2 elements of cost. Savings and costs, when you compare, that will give you net saving or net cost on with recourse basis. If without recourse basis, you will have to add the effect of additional fee, the difference between 1.25% of revenue and 0.75% of the revenue. And then because bad debts will no longer be the risk, the entire 0.6% will be a saving for the company on the total sales. Sales volume, however, here, please note, it will remain same. So these are some of the important points which you will have to keep in mind when you try to solve sums like this. Of course, I'm not going to detail out the discussion and the calculation that we make, but identifying how to identify different benefits, how to identify different costs, that's something which you must learn and practice a lot. So for that, you need to understand information given very well. Read it carefully, maybe spend a minute or two more than quickly starting your calculations and getting them entirely wrong. Obviously, when you need to learn and practice, you need to use resources given to you by the ACCA. Study hub resources, very good resources for learning all the concepts, in fact. But for this particular concept, Chapter 16, Section 3.2 will help you a lot. There are enough quizzes in the study hub and constructed response type questions on this concept of factoring. Make use of practice platform for additional sums taken directly from the past exams, specimen exams, or if you use approved learning partner resources, blank workspace is available in the practice platform, so you could do as much practice as possible. And you could make, of course, use of the past examination reports given by the examiner. These reports, point out observations about students' strengths and weaknesses. Just to give you an example, here is one of the para which examiner's report from one of the past exams brings about. They said the requirement was to evaluate 2 offers made by a factor. Better answers looked at the costs and benefits in a methodical way. Meaning of with recourse and without recourse had to be understood in order to calculate correctly the relative benefits in both the offers. Another key area that some candidates found challenging was calculating financial benefit of a lower level of receivables. I had illustrated to you earlier in that example how to calculate that, and the increased interest cost on advances given by the factor. So please make sure that you'll read all the examiner reports which are related to the topic that you are learning, then learn it, keeping the weaknesses of the students in mind, and then practice more than enough. So, in summary, what we have discussed in this video is factoring as a service used by companies to relieve themselves of having to manage the entire credit, get their money earlier, reduce the risk of bad debts, and eliminate unnecessary cost burdens. So evaluation could be done by listing pros and cons, and support it with the financial calculations. So that's it from my side. Wish you all the very best for learning and taking the exam to pass in the first attempt itself. Thank you very much.